Good afternoon, my name is Jordan Lambert, market analyst at Jalatomi Management. The Federal Reserve shocked markets last night by delaying the inevitable and deciding to continue the pace of its asset purchases, citing economic conditions needing to be stronger before the tapering begins. This sent gold and stocks soaring, with the precious metal climbing over $60 to reach as high as $13.68 in a short space of time, blasting through key resistance levels. Bernanke attempted to clarify that there is no preset path to scaling back the stimulus, and the first taper may not even begin this year, reiterating that any adjustments to policy will be purely down to economic improvements, significant economic improvements, particularly in the labour market. Right now, after the rally, gold is at an interesting technical juncture, trading quite close to various resistance levels. So this is a 4-hour chart, so I could draw a bearish trend line here, like so. And we can see price is currently at 13.59 and trading relatively close to this bearish trend line. We also have price sitting on the 50% Fibonacci retracement level. If you draw a Fibonacci retracement grid from the high of 1433 on the 28th of August and drag it down to this week's low at 1291, 50% is just at 1362, and we can see that it's reacting to this level. 61.8% is at 1379. So these levels should provide some protection for the bears who are trying to short this market after the rally we saw yesterday and today. We've also got resistance at 1368 on the 11th of September. We saw this level received a high volume of selling just here, and we can see that price is now finding resistance at that same level. So we've got a former level where price received a high amount of selling. We have Fibonacci 50%. We have price trading close to the bearish trend line. We also, as a backup resistance, we have 61.8% fib level, and if we zoom in, we can see that we have a spinning top here, which indicates that the market might be reacting positively to these resistances and beginning the next downward leg. However, I would not be surprised to see price move up and clearly test this 61.8% fib retracement level before moving downwards, but just purely because the fundamentals are quite strong, and after seeing such a surge in price doesn't just reverse as quickly, so we might see some sideways action with a spike up towards 61.8% before it eventually starts to come down again. So yeah, good news for gold. Fundamentally, it gets a few more months of $85 billion worth of bond purchases, weakening the dollar, and that will be good for gold. But technically, it looks like we could see some downward movement in the short term due to the technical resistance levels. Thank you very much for listening to me, and I'll speak to you again tomorrow.